I'm going to ask you, though, Morris, what prism you are using to assess risk right now going into earnings. Is it about balance sheets? Are you watching health metrics? Is it about the policy support? What's key for you?
Okay, a lot of things, but I'll just say this, that we think that we've come, as far as the financial markets are concerned, not as far as the economy, to the end of the beginning. World War II, when the British defeated the Nazis in El Alamein, Churchill made that speech. And I think that the Federal Reserve, Congress, the Treasury, by their actions with respect to stabilizing things, stabilizing the markets, and putting some sort of a floor under the economy, have brought us to that stage in terms of the financial markets. Unfortunately, we're not at that stage in terms of the economy. I think for the economy to get to that stage, we need a combination of safe, effective, and ubiquitous testing, both for the virus and for the antibodies. And for the market to do better, I think we need a safe and effective treatment and ultimately a vaccine.
And until then, you do what kind of buying and selling?
I can give you some idea what we've done in the hedge fund, what we've done long only. Long only, our focus is to be invested in really good companies, and we pretty much have maintained that strategy through the first quarter, and we're doing reasonably well. We're doing well. In terms of the hedge fund, our objective is capital appreciation. So our normal net exposure without a lot of leverage is 75%. Our net exposure in the first quarter was 30% for the quarter and basically zero during the month of March. And now we have raised our net exposure to 45 to 50. So if that gives you some idea. We think that you want to be invested in good things. We think you want to avoid any businesses that are going to have a problem financially either surviving or economically maintaining their value during a period of economic weakness, which is still indeterminate.
So, Morris, just to hear that you've raised your net exposure, your former place of employment, Goldman Sachs, out with this note today that U.S. stocks are unlikely to make fresh lows due to this do whatever it takes approach of policymakers right now. Do you agree with that?
I love David Kostin. I think he's fabulous. I don't know. I don't know whether you can measure whether the market is going to test its lows or not. But I think with the way we look at it, we have been given by the Fed, by the Congress, and by the Treasury, imperfectly, but we've been given financial stability. So if you say we're in an environment of financial stability, but very, very significant economic uncertainty, you don't want to be too negative. And you have to be able to take advantage of the upside when and if it occurs. And I think because this is a very different dynamic, we have the worst economic crisis, let's just say, since the Depression, but it's triggered largely by a health crisis. And when and if, and I have a great deal of confidence in the quality of American biotechnology and technology, and the focus that a lot of great companies such as Johnson & Johnson, as one example, are putting on this now, that one of these days, hopefully sooner than later, but I don't know when, we'll really get some good news with regard to therapy and or vaccine. And the market's a discounting mechanism. So we want to be there for that.
All right, Morris, it's Dominic here. I'm in studio right now. We've talked to so many folks out there who say that from a business and kind of a cultural standpoint, oftentimes these crises exacerbate trends that have already been in play prior to the crisis themselves. As you look at your investment thesis, are there companies that you see right now that will benefit from the changing paradigm that's developing right now, or some of those really big trends that have already been in place since before the crisis began?
Dom, I really think that's a great question because, number one, there were certain patterns of behavior that were ongoing for a long time. And I think that the economic crisis are intensifying those patterns. Simple example, two simple examples. Amazon just announced today that after hiring 100,000 more employees to facilitate getting goods to people and getting vital goods to people, they're hiring another 75,000. So the pattern of using the internet integrated with the physical world. Remember, we're physical people. We're not virtual people. I think that's intensifying. And when and if we come out of this, and I'm looking forward to that, but when and if we come out of this, I think those patterns will be even more embedded in our lifestyle. Second thing, I think you see what I'm holding up, and it's an iPhone. The smartphone is obviously part of our lifestyle. But one thing that we noticed in reading material that we're constantly doing is that iPhone usage per phone in the month of March was up something like 60%. And when you think about that and you think about the things we do with that, to entertain ourselves, to learn, to get the news, everything, I think that pattern intensifies. And we had a funny thing happen to us. It wasn't very funny, but my team, we virtualized the firm on March 6th, but we've been working, I think, pretty well. My iPhone broke. And I really, really panicked. And through great work, I got a new one in 3 hours. And 2 points. I really look at my new iPhone, which is an 11 Pro, and wow, the battery is fabulous. The visualization is better. It's faster. And I think in a world of 5G, which we're coming into faster than I think most people recognize, the T-Mobile deal, I think, is going to accelerate that. So that's good news. I think getting the best device, the most useful device, is just going to become that much more important.